Alrighty, we're gonna jump right on into it today. Hello, everybody. It's another daily plan, another day, pretty important day. And I'm your boss, Joe Boss. We have if we go to our day ahead notes here. Again, sometimes I send these out to the trading group, sometimes I don't. Yeah, if you guys ask me for this stuff, I'm pretty communicative with everyone who's in the trading group right now, and most of my thoughts that I post in here get posted in the group chat of the trading group. And we've had some pretty straightforward trades, it looks like. Not a whole lot is coming down the pike in the research forum, right? Around geopolitics stuff. We don't have a lot going on there. I know we have RFK's confirmation meeting for Secretary of Health, I believe. And that's the major political happening. And that'll be occurring, I believe, between the Bank of Canada meeting coming up here in about 30 minutes and the FOMC meeting that we're about to have, right? So the day ahead events are Bank of Canada meeting, and that's actually what this little article is. The report is due to be published, right? This is the Bank of Canada Monetary Policy Report. I guess I typoed that. Instead of 5:45, 6:45. I'm on Pacific, so I'm 3 hours behind this, so it's like, hey, 45, roughly about 30 minutes. We should be getting this. So this report will automatically print, and we'll see what the Bank of Canada has to say as soon as that comes out. 25 basis point rate cut is expected and has been expected for a really long time. I mean, if we go back to our week ahead expectations here, the odds were 76% that the Bank of Canada was going to cut this meeting. Now that we're getting closer to that February 1st date of when Trump has said he's going to enact tariffs, right, the 25% tariffs on Canada and Mexico. Look, this is gonna happen. If you were, I believe, in the Discord yesterday, I believe in the Trump Watch thread, yeah, we covered it. The very first White House press briefing. Let's see here. Yeah, press secretary confirms U.S. Canada, U.S. Mexico, and U.S. China tariffs on February 1st. Quote, February 1st is still on the books. So this is, that's confirmation, in my view, that, okay, we're getting these tariffs. And now the question becomes for the Bank of Canada, how are they going to respond? In my view, they should be open to being dovish, because if they don't, if they want to try and maintain their hawkish or even neutral policy that they finally reached, it's going to be a total shit show. Their unemployment's going to spike even higher. And maybe they're able to keep inflation at a moderate. Essentially, they're probably gonna have to print a decent amount of money, so then they don't have, again, it's also debatable how much of a hit economically Canada is going to take. Mexico is going to get hit a lot more by those 25% tariffs than Canada. However, Canada's still going to get hit a lot. Well, the United States is Canada's largest trading partner. Now, to focus on the day ahead here, we do have FOMC coming up. I have a separate stream set up for FOMC later today, because, well, I'm just going to be taking a break in the middle of the streams. And you can actually find in the streams channel, right? If you go to Plan the Profit, check out streams, and you scroll up, right? So this is the notification for today's stream. If you scroll up, here's the 2 streams. FOMC is right here. Now I'll go ahead and copy paste that into the chat. All right. So that is that as far as organization and whatnot. Let's look actually at tomorrow's events here. So we have Thursday, we have a bunch of Eurozone GDP stuff coming out. Preliminary, flash, advance, GDP, quarter-over-quarter GDP prints. The Euro area deposit facility rate. So the ECB makes their decision the day after today, so tomorrow. So it's really not gonna look great for euro dollar either. Like, don't get me wrong, I know I've been focusing a lot on Canada, and you know, Canada has all this tariff stuff and whatnot, and euro should hold up better against the US dollar than Canadian dollar or the Mexican peso. But if you get, any dovish guidance out of the ECB tomorrow, and for all we know, they're going to be data dependent, and they're going to watch out for how Trump is going to enact his tariffs. But also understand, Europe is in the middle of the election season, like especially in Germany. They're having an election next month. So just like with the Fed during the US election last year, there was questions about, hey, should the Fed not change their policy in order to not interfere with the economy, to potentially sway voters to think the economy is better or worse with one candidate or the other. That actually was considered. It turned out it was irrelevant, and I think it'd be generally pretty irrelevant. At least that's my read on it. I haven't seen anything specific talked about it, but you know, it looks like the ECB will start. You know, we can actually go here to our outlook. ECB expected to cut. It's fully expected to cut. And then the German federal election is at the end of February, February 23rd. And March 6th, the next rate cut is already at 80% odds. It's pretty nasty for Europe at the moment. So with that all in mind, let's finally get to the charts. Let's finally look at the heat map. But you guys know it's okay if we spend 10 minutes just covering the ground of okay, what's happening today? What are some expectations? We'll do this again in the FOMC stream a bit later. But it's just important to cover these things at the beginning of the stream. It's important to cover these things and just get everyone on the same page. And then if I say anything, oh hey, hello Harold, nice to see you, and I'll see you Ari. Now I got a little bit distracted there. Sorry. It's very nice to see you two in the chat. Very, very nice. I'm just gonna say, if I say something in that whole preamble and someone's got commentary of their own disagreeing with it, I want to make sure I hear that, because the whole point of that first 10 minutes is to go over the assumptions right? Oh, what are we looking at? Why are we looking at what we're looking at? Why do we have certain expectations, right? What are the underlying assumption data points? What's the rationale that allows us to have this expectation? And it's important to share those and how you come to those expectations and debate them when necessary. Because, sometimes the data can really go either way, 50-50. And, you need to know when the odds are really 50-50 and when there's good reasons to be bullish or good reasons to be bearish, or just focus on one direction than the other. Bullish expectation for equities today. Probably. I don't think FOMC is gonna cut, but I do think that they'll hold. I'm in line with the consensus. I don't think we'll see anything deviate from any of these expectations here. I do think that the RBNZ and the RBA, though, are going to get more dovish. And Ariana, you've been into that and watching that very carefully. Very happy to see that, because sometimes I'm not catching those the things that you're catching on the Australian economy and New Zealand economy. I remember in yesterday's stream we mentioned, hey, there was Australian CPI coming out, and there's probably going to be a move in the Aussie. But right now, Aussie and New Zealand are a lot more correlated at the moment, so they're kind of moving hand in hand right now. So whichever one is going to depreciate faster is going to depend on which central bank announces more dovish monetary policy first. Here's the thing. The RBA and the RBNZ both, if you look at these summary notes, the RBA has their next meeting on February 18th. The RBNZ also has their next meeting on February 18th. So it's not like, oh, we're going to get New Zealand's data first, so we can watch New Zealand's data and set more dovish expectations on it. It's like, we're pretty certain we're going to get an increase in dovish expectations, especially for the RBA, especially after the latest Australian CPI numbers. And I'll just turn down the music a hair. Yeah, there we go. Hopefully that'll be hopefully that's easier to hear me now. I was looking at the audio mixer and I'm like, that seems just a little loud. So hopefully it's easier to hear. So yeah, we're going to be getting mostly the same information from both these central banks at roughly the same time. If I had to pick, I'd probably lean on the RBA and maybe shorting Aussie over the Kiwi, because there's more room for additional cuts maybe getting priced into the RBA versus where they are like right now. Versus the RBNZ, 50 basis points is priced in. They're probably going to do another 25 at least. We'll see. All right. So let's continue on. Let's review this. Okay, so the dollar, if we look at the row, that's how we can tell which currency is strong. You look at the row, and the row for the US dollar is all green here, except against the yen and the yuan. And the yen is pretty strong against everything at the moment, except it looks like it's flat against the dollar and flat against the yuan. Aussie is down against everything. New Zealand is down against pretty much everything except Aussie. It's holding up against CAD, it's holding up against Swissy. And then the CAD itself, the Canadian dollar itself, is it's holding up against the Aussie, holding its value with New Zealand, and holding its value with the Swissy. So of all these, the best one to be short like right now across the board seems to have been the Aussie dollar, just looking at how red it's been across the board. And you can actually see that in these other currencies, like against the pound, the New Zealand, the CAD, and the Swissy. All these currencies have appreciated against the Australian dollar here. So all these green boxes that I'm hovering over, all of these indicate that the pound, the New Zealand, the CAD, the Swissy are all appreciating against the Aussie up here. And so Aussie's a pretty big loser today at the moment. Let's go ahead and check it out. It's only down 30 pips. But the problem is that when you go in, you start checking all the cross pairs, right? It's not that it's just weak against the dollar here because I have dollar open. It's weak against all the other currencies at the moment. And we get the Bank of Canada meeting in about 20 minutes. And just as a little reminder, between this stream, when this stream ends, and the next stream starts, if anyone is up for a game of poker, I can probably bring it up here. Yep, there we go. GTO Wizards asking me to sign in now. Oh, that was fast. Start a new game. I'll go ahead and put the lobby in the general chat. So there we go. We got a poker game going here. And I'll go ahead and set this up when the stream is done. So I'll put another message here in Discord, or just whenever the stream is done, we'll go ahead and hang out in the voice chat, chill, watch our trades, because there's probably not a whole lot going. I don't expect there to be a whole lot happening in the couple hours leading up to the FOMC meeting, as price wise, right? We can talk all we want about what we think is going to happen and what we no poker free Ari. Oh man. Well, I'm gonna be hanging out in the voice chat, so I'm just gonna leave that door open for anyone who comes on by into the voice chat after the stream, right? Now, again, if anyone's got any questions around the Bank of Canada, we can look at a bunch of research and search it up. I mean, we just do that now. BoC. So let's see here. Along with the consensus, we expect 25 basis point rate cut. Recent activity and survey data have been somewhat firmer. All right. The Bank of Canada has indicated that they can proceed with more gradual cuts now that rates are closer to neutral territory. Trump's tariffs pose the main downside risk to Canada's economy, but it's unlikely to prompt the Bank of Canada to cut rates more aggressively unless Trump follows through and puts in place tariff hikes negatively impacting Canada's economy. And again, after what we got from the Trump Watch thread, after reading what the press secretary said, right, the very, very first press briefing at the White House, Caroline Levitt is the name of the press secretary. She said, quote, February 1st is still on the books when asked if we should expect there to be tariffs against Canada, Mexico, and China. So that wasn't known information when all the stuff we're reading here was written. So we can look at this information with kind of a new set of eyes. And it seems like that's all the information for Bank of Canada. Yeah. Not a whole lot, for sure. All right, let's go ahead, expand this for a sec, and we will turn this on as we get closer. We have about 15 minutes remaining. Let's check out the heat map real quick and let's check out pound, New Zealand, CAD, and Swissy against the Australian dollar. So this going up means that the Australian dollar is weakening. Over the last 4 days, this pair is up 315 pips. All right, Aussie Swissy. Over the last 3 days, this is down 75 pips. Not so bad. And then the other two was New Zealand and CAD. Gotcha. So Aussie CAD also weakening, down about 75 pips. Not a huge deal. But note that this is a larger move, magnitude-wise, I think, than what we got out of even USD CAD, if I'm not mistaken. 75 pips over the last 3 days, from the open to the close. No, USD CAD still moved about 10 more pips, so it's kind of a negligible thing. And let's check out Oanda. Whoa, check that out. That has been quite a move lower. It's only been about 55 pips lower. Again, the RBNZ is also on a cutting path. It's just again, when it comes down to RBA and why the Aussie is getting weaker, that was because if we go back to our economic calendar over here, there we go, and we scroll up. Actually, if we go to today, and then we scroll up till we see Australia. Yep, there we go. Here's all the stuff. Here's all the Australian inflation data right here. And the inflation data, if you look at this actual column, a lot of these values are less than the values over here in the far right column, which is the prior number. So inflation is coming down in Australia. That's it. That's all this is saying. Inflation is coming down in Australia, which means that the RBA has the green light to be dovish. Which means, okay, the Australian currency is going to be your biggest loser here. And if you look at the row for Aussie, compare it against all these other currencies, yeah, it's losing against it all. And this is just follow through coming after Australian CPI and all the other metrics as well. But who knows, it might not be the biggest loser in about 12, 13 minutes here, depending on how dovish or not dovish the Bank of Canada is. You know, I can already hear it in my mind and in my ear. Financial media saying that if the Bank of Canada doesn't cut 25 basis points and take a dovish stance in their policy report in their meeting, that it would be a policy mistake, and that by signaling that they'll try and keep rates high, right? Or that they won't consider a 50 basis point rate cut at the next meeting if things get bad enough, right? Then it could very well be a policy mistake. Really, did Financial Juice actually say that? Was that in their video today, or? Oh no, I'm saying it would be a policy mistake if they weren't Dutch in their statement, because by default not being dovish, it means that the Bank of Canada is being more conservative with how much money they are trying to put into the economy, as the economy is about to get a major tariff from a major trading partner put on it. And that's precisely when you want some looser money in the system, so that then people have ample Canadian dollars to still conduct their business and, transact and actually get, it's going to cause some inflation. But the Bank of Canada also has a dual mandate with unemployment and inflation. It's all well and good if you can have unemployment come down and inflation be at target. But when you throw these tariffs on it, in 2 or 3 months, if you keep rates where they are right now with no dovish policy, no dovish outlook, you are essentially saying, okay, we are okay with higher unemployment. Well, it's going to be harder to get unemployment down than it would be to, I'm just assuming, than it would be to get inflation lower. Because they finally brought inflation down at a pretty steady pace in Canada. Now they want to make sure everyone stays employed. So if they get an extra 0.5% to 1.5% of inflation, sure, it wouldn't be great if that rise in inflation came from rate cuts, but it's better than the alternative of having like a 2 or 3 or 4% rise in the Canadian unemployment rate. So that's why I'm on the side of saying I would prefer if they were dovish, because then the currency would take a hit and more people would be employed. And, don't get me wrong, I'm currently short Canadian dollar, but I would prefer people to stay employed than the Bank of Canada try and prioritize, inflation. All right, we are getting the Bank of Canada readout here shortly. So I'm going to turn on the Financial Juice squawk here. So if you hear someone else in the background speaking, it is very likely going to be our friends over at Financial Juice. I can adjust this. Do something along those lines. Yeah. And I'll make this big enough so then everyone who's on their phone can reasonably see this stuff. All right, that should be good. And then we'll go to a shorter time frame. Wow, that's quite a pullback. 25 pip pullback. In since I started the stream. Wow. So hopefully that explains why I'd be more hopeful, like, hey, hopefully they are actually dovish, because, you know, they would strengthen the Canadian dollar if they cut 25 basis points and gave pretty lukewarm, neutral forward guidance. And that would be fine too, honestly, if they gave a neutral forward guidance, like, hey, we're gonna wait and we'll give you guys updates before like the next meeting comes out. We'll give statements in our speeches about what we think based on what we see over, you know, the next month. That makes sense to me. Yeah, that actually makes more sense than the dovish case, but being dovish right off the bat would save more people jobs at the cost of a little bit more inflation. All right. So we are currently going to be a little patient here. We are about 5 minutes. 5 minutes away from the Bank of Canada rate decision. And just double checking. I'm just gonna refresh my window here and turn this guy on. To make sure I am actually getting stuff. Got any jokes? None that I think are appropriate on the stream that I can think of immediately. Oh man, there's the guy with his slippers. There's that joke. That I like telling the slippers joke. But not terribly stream friendly. It's a-okay, Harold. But glad you're tuning in. Thoughts on DeepSeek? It's probably overhyped from what I'm gathering. Like, it's a cool project. It's open source. But apparently DeepSeek used more processing power than they originally stated. That's at least what's being implied right now. Apparently they said they only used 10,000 GPUs, A100s, but apparently they had 50,000. This is, you know, my memory of it. So the question is, well, did they only use 10,000 of their compute cluster for this project, or did they use all 50, or did they use somewhere between 10 and 50? Like, are they actually telling the truth about how long it took them to compute this, to train this model? So it seems like DeepSeek is like a half-truth sort of thing. It is an improvement on AI models, but it's not as huge of an improvement as what some people were saying it was when the thing first was announced and released and caused the market to dip. And a lot of people have been buying that tip, man. A lot of smart people, a lot of smart traders that I know make money were buying that. dipped that day, just indiscriminately. They saw it down, they looked at the news for a second, and they were buying. And so and there are other smart traders I know that stayed away from buying it.
1 minute remaining.
But those guys definitely have a bit of a bias that they admit that they have themselves. Anyways, 30 seconds. 30 seconds.
Ten seconds. Cut 25 basis point cut, 25 basis point cut, 3% as expected. So the Bank of Canada says rate cuts are starting to boost the economy, and recent strengthening in both consumption and housing activity is expected to continue. CPI inflation will be around the 2% target over the next 2 years. And the Bank of Canada announces the end of quantitative tightening and will gradually restart asset purchases in early March. If broad-based and significant tariffs were imposed, the resilience of Canada's economy would be tested. Cumulative reduction in policy rates since last June is substantial, and monetary policy cannot offset tariffs but can help the economy adjust. Higher cost of imported goods would put direct pressure on inflation. Long-lasting and broad-based trade conflict would badly hurt economic activity in Canada. Potential for trade conflict triggered by new US tariffs is a major uncertainty and could be very disruptive. So the Bank of Canada cuts 2025 growth forecast to 1.8% from 2.1% in October and 1.8% in 2026 versus the prior forecast of 2.3%. And what Macklem says, with inflation back around the 2% target, we are better positioned to be a source of economic stability. We can't use rates to lean against weaker output and higher inflation at the same time. And the Bank of Canada see fourth quarter annualized GDP at 1.8% versus 2% seen in October.
So this is explicitly more hawkish forward guidance, saying we're not really going to be...
The Bank of Canada say inflation to average 2.3% in 2025, 2.1% in 2026.
They're not sacrificing
the Bank
their
of Canada
currency.
forecasts do not take into account the potential effect of US tariffs.
Uh-oh.
The bank estimates that fourth quarter 2024 output gap is between minus 1.25 and minus 0.25%. Nominal interest rate is estimated to be in the range of 2.25 to 3.25%, unchanged from October.
You know, it's not like Trump has been...
And Bank of Canada potential output growth is expected to slow from 2.5% in 2024 to around 1.5% on average over 2025 and 26, down from the October forecast of 1.9%.
You know, it's not like Trump hasn't been saying for the last, 3 months that he wants to tariff Canada and Mexico. It's not like the Bank of Canada couldn't have done a risk assessment, a scenario analysis of what would happen to the Canadian economy if tariffs are put on. So I'm really disappointed in the Bank of Canada. Like, as far as research goes, this is incredibly disappointing. Why the hell doesn't the Bank of Canada have scenario analysis for a risk that's been signaled for the last 3-4 months, arguably 4, call it 3, it's like, what the actual hell? Absolutely fade. Yeah, man. All right, I'm gonna have to post in my trade log, I guess, on another screen, I took another long when I saw the dip and I listened to Financial Juice and I was like, that's a buy, because it seems like I just jinxed it and the Bank of Canada is making a stupid policy mistake. Their forward guidance is horrendous. The Bank of Canada is like, the fact that they had months to do a scenario analysis and they didn't do one for one of the biggest potential negative economic impacts on the Canadian economy. Oh, they were fast during COVID. They created all sorts of models and things. Between March, April, and May of 2020, they worked their butts off to create models. But this, well, in the same amount of time, they've said, oh, we can't do much about it. We can't do much. It's like, really? Really, Malcolm? The governor of the Bank of Canada, Malcolm, right? That's his name, Malcolm. Come on, that's the stance you want to take? Now, this will be especially hilarious. Imagine if this is the policy from the Bank of Canada, and then we actually get Powell shaking his fist at Trump saying the Fed is independent, which makes the dollar get a lot stronger, right? If Powell says anything along the lines of the Fed will remain and maintain its independence, right? We will move at our own pace, and maybe that moves in line with the timeline that Trump wants us to cut rates. Conveniently, maybe it does, but we are emphasizing that the Fed's an independent body, and he's shaking his fist saying we are independent, just like what he did last, I believe, in the December meeting of 2024, explicit, right? And that actually made the US dollar get stronger when he did that. That was the effect last time he shook his fist at Trump. So now going into this meeting that we're getting later today, if Powell, again, my expression for Powell talking about the Fed maintaining its independence and him staying the Fed chair and not being fireable effectively, is, shaking his fist at Trump. I'm rounding it down to that expression instead of saying, oh, the Powell and the Fed independence and like all these conditionals. Powell shaking his fist at Trump. That's what I'm saying. Keeping it simple. So Malcolm does this policy error. Oh, what's this? There are already signs that the threat of U.S. tariffs is weighing on consumer and business confidence, and has also contributed to Canadian dollar easing. A global so they did a scenario analysis for a global tariff, but not on this. Malcolm, the 25% tariff on Canada and Mexico was announced first before there were any rumors, like from that WAPO article that we got talking about how, oh, Trump is going to do gradual global tariffs, right? Like what BoC wants to do with the 2.5% global tariff and ramp it up to like 5 or 10% or something. And he is the Treasury Secretary now. So we have a pro-tariff Treasury Secretary. That's kind of a big deal. So, look, don't get me wrong. Sure, there's probably going to be like a baseline global tariff, but it seems like the Bank of Canada has made a research error in not spending the last 2 months figuring out how a 25% tariff on their entire economy's exports would impact their economy. Instead, they're looking at this thing, which is this thing right here that I'm highlighting, which is, oh, you know, if we get that Besant, the Treasury Secretary, who was just confirmed in the United States, if we get his global tariff that gets ramped up, we'll see, 2 percentage points off the first year. Well, if I recall, we can search over here in our and search through tariff. And I believe we pointed this out in the last one. Let's see here. How quickly can we find it? Duh. God, look at all this research, man. Yeah, here it is. Model simulations we conducted. This is Wells Fargo, by the way. Right? Where Wells Fargo did a scenario analysis. Why couldn't the Bank of Canada do a scenario analysis? Wells Fargo did a scenario analysis saying, hey, for Canada, model simulations we conducted suggest U.S. real GDP growth would fall by that amount. Here we go. Yeah, 2.5 percentage points off Canada's economic growth in 2025, which is exactly here what the governor of the Bank of Canada is saying. Exact same expectation as what Wells Fargo put here. 2.5 percentage points off Canadian GDP for 2025, 2.5 percentage points off in the first year, which would be 2025. And then push the annual inflation rate up by 4 percentage points. So that means plus 4% to year-over-year inflation. Guys, not good. Yeah, and you're right. They also have no government. Wow. Canadian swap see just a 47% chance of an additional Bank of Canada easing in March. Little change. Dude, this thing's gonna get whipsawed so much. Why the hell would the rate market price that in? The only thing that I can rationalize is there's a significant number of traders and speculators who actually think the 25% tariffs will not be put in place. Like, that's the main expectation that I'm reading off this. So the question is, why do those people think that? Or maybe there's something else. Maybe there's something else that we're missing. But it sure hell looks like the Bank of Canada is making a policy mistake, and that this reaction here is just going to be that, a reaction. And this percentage is probably next week. Like, again, this was 47% in March. We can actually go back and check what our odds were at the beginning of this week for March. Yeah, because I'm smart. Oh, look at that. A 25 basis point rate cut is expected at their March 12th meeting with a 44% odds. And over here it says Canadian swaps see 47% chance of additional Bank of Canada easing in March. So it's unchanged. It is unchanged. There is no difference in rate cut expectations in March after this speech here. So that whole speech about like, oh man, I wonder why it's lower. Well, this is why we have outlooks, and this is why we have summaries, and this is why we don't just focus on the meeting that's right in front of us. We also think about, okay, what's going on at the upcoming meeting here, the one that's occurring next, and then the one after that. Because the price of things, as soon as the most recent, most upcoming meeting is done and over with, people will immediately start setting expectations for the next meeting. And depending on how forward guidance from a central bank is set, you might have price move in a way that seems unintuitive unless you were thinking about future expectations for the next thing over the next couple of months. So this type of thinking doesn't come naturally to a lot of people, but having these notes helps a ton, because it's like, hey, look, on April 1st, which is the like 2 FOMC meetings from now, right? Oh no, that's not. Yeah, the next FOMC meeting isn't even mentioned here because they're expected to stay on hold, right? So the policy is expected to stay on hold at the next meeting and this meeting, so I didn't bother mentioning it. But I did mention, hey, we have tariffs coming in, and then hey, on April 1st, we're getting a report. I'm gonna leave this here in the summary notes until April 1st. Just a reminder, like, hey, the US government is currently reviewing all the transactions each department is doing and creating a mega report on the trade the US is doing and taking account of everything and sending that off to the president to make executive decisions on. We could see a totally new tariff policy in the month of April after this report is sent to the president. And there could be a preliminary report sent out like in the middle of March, like a draft of the report. And Trump could already start preparing preliminary ideas of what he could be doing. And then as soon as the report drops on April 1st, he reads it, he says a bunch of stuff, and then he enacts policy either on the same or the next day. And it looks like, oh my God, Trump is moving so fast, but really it's a lot of preparation and thinking far ahead of time. And it gives the illusion of, well, don't get me wrong, the guy is actually working very, very quickly and is very, very busy, but a lot of his day is spent thinking about what's happening next month, what's happening in a quarter from now, what are the big challenges over the next couple of years, what are things that we can do to mitigate those things, how can we work around it. Like, you have to be able to work tactically and be nimble to things as they are currently happening without losing sight of the longer term things that aren't changing so rapidly. And given that, if you are aware of the bigger picture things that happen in like a couple of months from now, and some big piece of information does come out today that impacts those expectations a couple months out, you'll very likely see stuff like a bigger reaction out of the markets, because it doesn't just, that piece of news doesn't just impact what traders are thinking for like the next week. It impacts what traders were expecting over the next couple of months. And maybe that causes a lot of people to add into, take off, reverse positions than what they were originally expecting. You know, I hope that rant, that little talk was enlightening. Again, everybody knows I love my expectations. My whole thing is trading is about the change in expectations. You know, I know that's, you know, kind of a platitude, rule of thumb like thing. And I've thought of ways to make that statement like more accurate and more precise, but it's just easier to remember. It gets the point across. And, you know, if anyone ever wants to, you know, talk with me about like specifics of like, okay, well, what does that really mean? And, you know, can you tell me more about really what expectations are? And, you know, I can take that one sentence. Trading is about getting exposure to the change in expectations, to, you know, a couple of paragraphs, right? I mean, there's actually a whole channel in the Discord called Expectations. And whenever I find someone on YouTube talking about expectations, I'm just like, oh, hey, here's an example of someone talking about how to set expectations. Oh, here's a tweet from me last year. Actually, this tweet comes from 2023. The more I learn about the world, the better at trading I get. It's about knowing what's happening now, what's expected to happen in the future, and how new information realizes those expectations or not. Don't trade things you don't know. Don't listen to people without understanding the assumptions that go into their future expectations, like how we focused on, how I explicitly said during the first 10 minutes of the show, we try and focus on, okay, here's the ground rules, here's what we're thinking, and let's get everyone talking about what's going on here, so then everyone's on the same page. And if there's different rules, you know, different schools of thought, we can bring them up and then talk about them. So without the last section here, without knowing a market and a clear understanding of what to expect, it's not smart to speculate on how new information will move it. I really like the clarity that I had at this point in time to write that. This is a very, very, very nice bit, and I have it pinned here in the expectations bit. Oh, is that the crystal ball challenge? Yeah, we call this the crystal ball game. Crystal ball trading game. We call this the crystal ball trading game because you're going to see how well you can do trading stocks and bonds if you know the news from the front page of Wall Street Journal one day in advance. In other words, you'll be in the dreamed of position of being a trader who, quote, knows the future. For example, you will be shown the front page of the Wall Street Journal for a Wednesday and be able to take a long or short position in the stock market and in the bond market at prices prevailing at Monday's close, that is 2 days earlier. And then the trades will be liquidated at Tuesday's closing price. Note on each front page, we've blacked out anything else that tells you explicitly what market prices are that day and what they actually did. Leaving that information would make the game too easy and no fun at all. So I have all sorts of little resources hidden and packed around the Discord server. This Discord server's been around for like 2, 3, 4 years. It's been around. This Discord server's been around for a while. So it's got a lot of resources. I've pinned some interesting stuff. And there's, you know, maybe there's some low quality stuff every now and again, don't get me wrong. But over time, you kind of find your groove of, okay, here's what's important to focus on. Here's what's not important to focus on. Oh, yeah. Here's this guy, Jim Donovan. Let's see here. Jim Donovan. banker. This guy right here is an American investment banker who is the vice chairman of global client coverage at Goldman Sachs. And he's a professor whose YouTube videos have reached a lot of people. He was nominated during Trump's first term to serve as the deputy to the Secretary of Treasury. Wow. So, guy's kind of a big shot. And he said, hey, read the Wall Street Journal, right? We just talked about this game right here, the crystal ball game. He says, hey, read the Wall Street Journal every day. Read the outlooks. He specifically says, read the outlooks. And look at this. Here we have some outlooks. And I've been doing this way before I found this guy's video, but, you know, reading your outlooks for financial stuff, and yeah, I know that's Martin and whatnot, but he's covering like, hey, here's how I'm doing my trading expectations and whatnot. But again, setting outlooks and expectations. You know what my rule of thumb is for how to find out when you're actually good? When do you find out, okay, I am reading the outlooks well and I am setting good expectations? Because that's, you know, it's like, okay, there's all this information out there, sure, this all looks well and good on the Discord and whatnot, but at what point do I actually know if I'm improving? And being able to know what that benchmark is kind of important. So my rule of thumb is, if you are reading the outlooks consistently, and by the outlooks I mean literally this spot right here, outlooks, just go ahead and read the outlooks. All these are free. They're not paywall or anything. These are all provided directly from the banks. I'm just sharing the link to where they are distributing stuff. So I'm just link sharing. So you go to the site, you check out their research, and week after week, month after month, you read their research. And over time, you become familiar with their writing style and who's writing it and what kind of expectations they have and how well they are describing different issues in the market. And you start to get a little bit more competent. And eventually you reach a threshold where you get a new piece of information. Like here in the economic calendar, you're like, oh wow, we just got this Australian CPI that just came out, right? I think this is going to make the RBA more dovish, because lower inflation means that they don't have to keep rates as high. And then you go and you read the outlooks, and that's what you read from guys who literally have their PhDs who are writing these things for free. And at that point, like, okay, these guys also have the same opinion, and I'm learning. And the bonus is that even when you're right, you're still learning something by reading their commentary, because sometimes they will view it from a slightly different angle, a different qualitative angle. Maybe they'll be looking at a couple of charts with data you might not know about or have ease of access to, so you get exposed to what data people use to come maybe to the same interpretation as you did. And it expands your understanding of how people are setting their expectations. And then over time, as you learn more, it becomes easier and easier to keep up with how and what other people are likely to think, given some data. Okay, here's what this price is probably going to do. Oh, there's going to be a lot of uncertainty. Oh, there's going to be a whole lot of certainty now. Depending on how the data shows up, you'll actually know how to interpret stuff. That comes from experience and from staying on top of stuff, right? Getting educated. That's step number 1. That's getting good at reading outlooks and setting like economic expectations. The next part is pricing expectations, which is what all these things are, right? All these arrows that point up and point down and point up and have timestamps on them. These are my trading expectations. So just because I have an expectation about what some economic data is going to do, this is kind of separate. This is, okay, given what I know and given that information, how should I actually interpret a chart? What prices should I target over what time horizon? And that's where having some indicators like this can really, really come in handy. Yeah. Go ahead and set that to like a 2 hour here. Yep. Tapped that little spot right there. And we went up, and away. Now, granted, this was before the Bank of Canada meeting. Now, this is after. So maybe we're not so interested in where the top or the bottom is for the day. Maybe we're more interested in where we're likely going to close. And it seems like maybe we'll end up doing something like that. Now, I'd be happy if we closed a bit higher, but I really don't mind if we close 10, 20 pips lower from here, or exactly at this price, or 10, 20 pips higher. Now, that would be an expectation, just using that information. But this is where people can't get ahead of themselves, right? There's other things going on today. We still have the FOMC meeting. Right? Right. And we have the Bank of Canada press conference coming up here. And the stream will end after the Bank of Canada press conference. So we're going to do the press conference. This is going to be a longer stream. We're going to have 2 long streams today. Because we're going to be here before the FOMC decision. And we will be here for Powell's press conference. And then that'll be that. Let's see here. Might be neutral, inflation coming, hikes coming, tariffs coming. Yeah, it's definitely not looking good. I know I was in a comment from a while ago, from like over almost 20 minutes ago, but yeah, I get what you're saying, Ari. So I really hope that this information's useful. Oh, there is one thing that I am forgetting, and that was to finish up my point on the trading quote-unquote expectations, right? So there is getting your expectations through outlooks, staying up to date on events coming ahead, right? That's why we have this whole group. It's the whole point. It's a collaborative research forum. Look at all these elections that are getting followed. You have, if you want to get serious on trading FX or having international exposure, and you're doing it on your own, you don't want to get sideswiped by geopolitical events or a new government coming in and changing the fiscal policy under your nose. And then you're having to spend like 2 weeks learning about all this stuff after the fact, after these policies are getting implemented and whatnot. thankfully I'm here and all this research is free and it's supposed to be collaborative. Anyone can come into these channels and be like, hey, I speak German and I know a lot about German politics. I can translate some of the tweets, right? And that's currently what I'm doing, right? I'm translating tweets. Now, I don't speak German. I'm using Google Translate here. But same thing, actually, it would probably be more useful at the moment if someone spoke a little French, right? Where's the French? Yeah, there we go. France. There we go. This person is in charge of a budget deal that's supposed to be closing, a compromise budget in the French Senate that's supposed to be closing on Thursday. And if there is no compromise budget, it's going to cost France 100 million euros a day to operate without having this budget. It's going to be like $100 million extra in supplementary, like fines or fees or whatever. Now, I wish I could just get more information. I've just been listening to this interview, a full interview here with Emil on Translate, but just doing that for some of the most important political happenings in all these different countries is incredibly important. For example, we have stuff on the Mexican drug war. So whenever there's this guy here, Bill Malusian. He used to be my local news anchor, and now he's one of the top news anchors. He's one of I'm pretty sure he's one of the most followed journalists and reporters in the world, and he has spent a lot of time in his life down by the southern border of the United States, the northern border of Mexico. So I definitely trust him when he reports something around the border. And this is all the sorts of stuff that's happening with the Mexican drug war. So this is all the conflict stuff. Anything that's cartel related goes in here. And then anything that's related to the border or immigration is going in here with the Mexico-US border crisis threat. And then Russia-Ukraine, right? And then we actually have two threads here for England. There's a local election that's occurring here, right? May 1st in the UK. There's local elections. And then we always have the Wikipedia page there so we can get some background or some polling information off Wikipedia. And then there is another UK election. Yep. The general election, which if we go to the pinned posts, I did not mean to do that. Unpinned post. Let's go to the top. This election scheduled to be held no later than Wednesday, the 15th of August, 2029, but it's probably going to be happening sometime this year. That's Talia Robinson. It's probably going to be happening sometime this year. Keir Starmer doesn't look like he's going to win. His popularity is in the absolute toilet. I mean, you can see it right here. Right? His disapproval rate is at historic levels. His approval is like just above 20. Just above 20. So there's probably going to be some kind of regime change occurring in the UK. In Germany, there was a stabbing. There was a stabbing that occurred in the UK and another stabbing that occurred in Germany. And you can see this is Merz, the head of the CDU, who he's not expected to win. There's a lot of people who kind of think he's kind of a doofus, but he's very pro-Ukraine war. He wants the Ukraine war to go on. There's a lot of politicking to learn. And don't get me wrong, a lot of people say, oh man, I don't like politics. I could care less. But the truth is these people control the wallet of these governments and how they spend it. And when you are trading the currency of said governments, you need to know how stimulatory they are going to be for their economy, or how fiscally responsible they're going to be. Because if they are not fiscally responsible, then you can probably come up with some theory of like, oh, they're not being fiscally responsible, and they're doing so at such a rate that it's going to make inflation go up over the rest of this year. We're going to have higher inflation than what's currently forecast. So I'm going to find a currency that has really, really low inflation and go, long that one and short the euro, because I think it's going to have higher inflation. So I'll be long the disinflationary currency and short the inflationary currency. Like, yeah, don't get me wrong, that's not necessary. That is macro, right? There's a lot of guys who are like, oh man, but I don't want to do macro trading at all. It's like, well, hey, you understand a lot of TA has conditional win rates based on the economic regime you're in, right? And that is determined by macroeconomics. For example, in Bitcoin, like BTC, USD, let's just go to Coinbase. In a bull run, oh my god, here's one right there. In technical analysis, you can come up with something like an ascending wedge pattern, right? I thought that was one there. Oh, look, like right there, yeah. Oh man, it's an ascending triangle. Look at that, ascending triangle. Oh, we've broken up to the upside over here. Well, what happened here? The Fed stayed on hold, and this was the Fed staying on hold. Look at that. It's like, okay, so this was going into the FOMC meeting, and then this is, I believe, after the FOMC meeting, if I'm not mistaken. If I go to trading economics, I'm really curious. I got my ego invested into it now. Yes, I am correct. Right here, December 18th. This was FOMC day at 7 p.m. GMT. So let's set this to GMT, which should be, where is there we go, London. So they said 7 p.m. So it'd be 19, which is right here in this candle, because these are 2-hour candles. Let's see, how far can we go back? There, now we're at 1-hour candles. So right here. So going into FOMC, you had this drop off, and then this, you could say, was leading into FOMC. This whole time right here. Actually, no, this was FOMC. Yeah, this is 18. Yeah, this is the hour FOMC came in at. I was misreading it over here. This was when FOMC came out. The lead into FOMC, and then boom, FOMC. But we already knew the expectation for FOMC. They were going to stay on hold. Like, we already knew exactly what they were going to do. So it's like, okay, we're staying long because why? And so this is, easy to short. And if you're not like crazy over leverage, and considering the volatility, the upside volatility in Bitcoin, it's very, if you don't know what you're doing, shorting Bitcoin is no simple task. But in that situation last December, it was quite rewarding for everyone who knew anything about FOMC meetings at all. Like, crazy, stupid, simple. So that was the whole pitch of like, hey, dude, you can use technicals, sure, it's fine, but there are regimes, there are economic regimes that occur, and if you don't know how the economic regimes affect asset prices and asset classes, and general risk on, risk off dynamics, growth inflation matrix, dollar smile, those kinds of concepts, it's going to be harder for you to determine what the aggregate return might be and set reasonable expectations, right? How calibrated are you on your expectations? Are you 80% accurate? And when you set an expectation and you think there's an 80% probability of it getting hit, do you actually hit your expectation 80% of the time? Like, are your probabilities aligned when you say, oh, this is a 50-50 coin flip? Well, was the event actually a 50-50 coin flip, or were you just too ignorant about the facts at hand that you could have known if you worked a little harder, that might have informed you to really be in line with the actual odds, which probably were more or less something like 80-20? Like, that extra 30% from that extra work to help you set well calibrated expectations over price and time really are important skills to have. And don't get me wrong, there are robots that can do this, but there's really hard math behind those guys. I mean, not impossible, but you have to know it, and generally speaking, you go to school for it. And more so, you're also usually going to a firm, and that firm has insanely expensive data, or you're just at least connected to a Bloomberg terminal with that expensive data that the firm's paying, and you're able to do all your cool math stuff with really good data, and care in the world, right? You also have a couple of coworkers who know what they're doing too, who've learned from people before them and passing their knowledge on to you, right? It's a little different in the retail space. Like, it's a lot easier to think in aggregate, right? Instead of focusing, for example, on the outcome of one particular trade, you're thinking of like, okay, here's what I think is going to happen maybe over the next quarter, and then here's what I think is going to happen over the next month. Here are the major events I have to keep out an eye for. All right, with that all in mind, how do I tactically, that's all the strategy, how do I tactically get exposure over, like, the next week, right? Where do I think the low is going to be? Where do I think the high is going to be? What do I want to be doing? Do I want to be getting long or short based on my expectation for the next month or quarter? Do I even want to have that exposure on for that long? Maybe I'm only thinking I'm going to have this exposure on for the week I'm taking it, or maybe a couple weeks, not even a whole month. Maybe it's like a week and a half, 2.5 weeks, right? Nothing terribly crazy. So we are currently waiting for what's his face to actually start speaking at the Bank of Canada. I am pulling up you. Oh.
First, inflation. A year ago, inflation was 3%. Short-term expectations were still elevated, and inflationary pressures were broader than normal. In recent months, inflation has remained close to 2%. Consumer expectations have largely normalized, and there is no longer evidence of
All right, cool. He's still just reading the
inflationary
statement.
pressures.
Not a big deal. He's not.
Shelter price inflation
When he gets into
remains
Q&A,
elevated,
it'll actually be
but
important.
is gradually coming down. While we expect some volatility in CPI inflation due to temporary tax measures, our forecast is that inflation will remain close to the 2% target over the next 2 years. Second, growth. There are signs economic activity is gaining momentum as past interest rate cuts work their way through the economy. Lower borrowing costs are boosting activity in the housing market, as well as spending on big-ticket items like automobiles. The pickup in household spending is starting to broaden to other consumer items and is projected to strengthen further. Business investment has been weak, but is forecast to increase gradually. And the outlook for exports is being supported by new export capacity for oil and gas. Employment has strengthened in recent months, but with job creation having lagged labor force growth for more than a year, the labor market remains soft. The unemployment rate was 6.7% in December, and wage pressures, which have proven sticky, are showing some signs of easing. The bank forecasts GDP growth will strengthen from 1.3% in 2024 to 1.8% in 2025 and 2026. Growth in GDP per person is projected to pick up as lower interest rates and rising incomes support spending. The projected increase in overall GDP growth is more modest than it was in October, largely due to lower population growth that reflects new federal immigration policies. There are risks around the outlook, and Governing Council is equally concerned about inflation rising above 2% or falling below it. Absent the threat of tariffs, the risks to the inflation outlook are roughly balanced. Let me now turn to the question of tariffs. U.S. trade policy is a major source of uncertainty. There are many possible scenarios. There's a lot we don't know. We don't know what new tariffs will be imposed, when, or how long they will last. We don't know the scope of retaliatory measures or what fiscal supports will be provided. And even when we know more about what is going to happen, I do need to be clear, it's still going to be difficult to be precise about the economic impacts because we have little historical experience with tariff changes of the magnitude that the U.S. is contemplating. Nevertheless, some things are clear. A long-lasting and broad-based trade conflict would badly hurt economic activity in Canada. At the same time, the higher cost of imported goods will put direct upward pressure on inflation. The magnitude and timing of the impacts on output and inflation will depend importantly on how businesses and households in the United States and Canada adjust to higher import prices. Malheureusement, les droits de douane rendent les économies moins efficaces. Ils font baisser la production et les revenus.
Now he's going to read the whole thing in French. So we are not listening to that. Right? He's still going. And he's going to keep going for a bit. So we're going to have Financial Juice on here. So if you hear someone talking over me on the stream, it's the guy in the squawk box at Financial Juice. Because this meeting is still live and we still need Q&A here. Right? There's still going to be a Q&A section. At least I think. There usually is Q&A. So when the Q&A comes up, we should hear something from the SWOC or...
Policy cannot offset this. What we can do is help the economy adjust. With inflation back around the 2% target, we are better positioned to be a source of economic stability. However, with a single instrument, our policy interest rate, we can't lean against weaker output and higher inflation at the same time. As we consider our monetary policy response, we will need to carefully assess the downward pressure on inflation from weakness in the economy and weigh that against the upward pressure on inflation from higher input prices and supply chain disruptions. So let me tell you what we're doing in preparation. In recent years, we have invested in better information on supply chains, trade links, and the connections between sectors. And this is helping us analyze the effects of supply disruptions, including tariffs. We've begun assessing the possible consequences of different tariff scenarios, and we present an example in the Monetary Policy Report. We are stepping up our outreach activities across the country to hear directly from those affected by trade uncertainty. This includes augmenting our surveys of business.
Yeah, I get that. We'll unmute him in a sec. This is important. The Bank of Canada here is saying that they expect CPI in Canada from tariffs, from whatever tariff war goes on between the US and Canada, they expect inflation to be transitory. That is the exact same expectation as the FOMC. That's their baseline. They also expect inflation to be transitory. And I did a review of what that's supposed to mean, because during COVID, inflation was supposed to be transitory, and it was transitory for a whole year and a half. And Janet Yellen came out a couple months after inflation started heading back to normal, and she said, oh man, she was the Secretary of the United States Treasury, and she said, oh man, I totally regret using the word transitory, because that word in people's head means in like 1 to 5 months, the inflation goes away. So if we stick to what Janet Yellen says about expectations of using we're setting transitory inflation expectations from tariff impacts, this should be okay by the summertime at the latest. Any inflationary impact should start coming down or be mostly diminished. So let's go ahead and turn this guy back on.
We don't target the exchange rate. The flexible exchange rate is an integral part of our monetary policy framework that allows us to gear monetary policy in Canada to the specific situation in Canada. So if you're asking us, has the movement in the Canada-US exchange rate constrained our monetary policy decisions to this point? The answer is no. We've cut our policy interest rate 6 consecutive times now, bringing the rate down from 5% to 3%, 200 basis points. That is having some impact on the Canadian dollar, but as we discuss actually at some length in the Monetary Policy Report, that effect is relatively modest. The depreciation we've seen, the recent depreciation we've seen in the Canadian dollar has been more driven, in our view, by trade uncertainty, and particularly President Trump's threats to impose 25% tariffs on Canadian exports. You can see that from a number of things, but in particular, if you look at the timing of the depreciation, it follows very closely on President Trump's threats. This is a more material move in the Canadian dollar. I mean, if you go back to October, Canadian dollar was 73, 74 cents. It's now been fluctuating. It's now sort of 69 to 70. So look, that is a material depreciation, and it will start to have some impacts. Depreciation makes our exports more competitive. Of course, the threats of tariffs will make them much less competitive. But it also has some other impacts. It means that everything we import the cost of things we import, it will be higher. And you will start to see that relatively quickly on things like fresh fruit and vegetables, which obviously is winter in Canada. We import a lot of those from the United States. That'll get passed through pretty quickly. More generally, pass-through tends to be pretty slow. It tends to evolve over time, but that is something that we have built into the outlook that you see today. The other implication of a weaker Canadian dollar is that any intermediate inputs, so for example, machinery and equipment, investments Canadian companies make, buy equipment from the United States, that becomes more expensive. That will hurt our investment. So those things, we've assumed a 70-cent dollar in the projection that we published today, and the depreciation we've seen so far is built into that. Going forward, look, there's no doubt the exchange rate is responding to the threat of tariffs, and I think it's reasonable to expect that as developments unfold, that will be financial markets. We'll take that on board. It'll be reflected, and that is something that we will have to build in to our outlook. And
doesn't want to say the Canadian dollar is going to get weak as shit.
The more we're going to have to take those into account as we set policy going forward.
Okay, we'll go now to Pramit Mukherjee from Thomson Reuters.
Thanks, Paul. Good morning, Governor. So you have said that in the event of a
He's way too quiet.
and possible retaliation from Canada, monetary policy might not be able to offset that. But do you think quantitative easing will be one of the tools that you can resort to?
So I think what you're saying is, your question is, what's going to happen to interest rates if 25% tariffs are imposed?
No, actually, I wanted to understand that is quantitative easing one of the tools?
Oh, quantitative easing. Sorry, I missed that part. Okay. We're a long way from needing quantitative easing. I mean, our policy rate is at 3%. We recently published a review of our use of our extraordinary tools during COVID, and what we concluded was that the bar for using quantitative easing in Canada has always been very high. In fact, we've only used it once when we had a once in 100-year pandemic. And the bar for using quantitative easing should remain very high going forward. We're a long way from that, and we have plenty of room with our policy rate.
Okay, next I'm going to go to Kevin Carmichael of The Logic. I'm being told that the mics here in the room aren't picking up very well on the webcast, so please do your best to focus into the microphone when you're asking your questions. Kevin.
Good morning. To what extent are the threat of tariffs baked into what you've done today, the policy decision and the forecast? I know you've laid out in excellent detail about how difficult it is to anticipate what might be coming, but did you try to factor in the tariff threat in any sort of way in what you've done today?
Well, I'll answer that in two parts. With respect to the forecast that we published in the Monetary Policy Report, I think we're very clear. It assumes that there are no new tariffs. It does include a modest effect of the uncertainty being created by the threat of tariffs, particularly on investment. But effectively, in the projection, we're assuming that the threat of tariff, it's a rather nice scenario. The threat of tariffs dissipates, that uncertainty goes away, and we don't have to deal with it. We go on in the second part, of course, at looking at a scenario where there are broad-based and actually permanent new tariffs to give some idea of what the impact would be. But that is not a forecast. Coming to the decision itself, obviously the forecast is an important input in the decision, but obviously the risks around it also factor into the decision. We've got to look at the whole landscape. So, I mean, if you start with the facts on the ground, what's going on in the economy, what you see is that inflation has remained pretty close to 2% since last summer. And if you look at all our indicators of inflation, And underlying inflation looks like it's running around 2%. We're not seeing broad-based inflationary pressures. Secondly, the economy is still in excess supply. Labor market's soft, unemployment rate 6.7%. That softness in the economy, that slack in the economy, that is putting downward pressure on inflation. We want to see growth pick up, take up that slack to keep inflation close to 2%. And we are starting to see that. Growth is picking up, and we want to see that pick up sustained to absorb that slack. So, I think those things suggested that, a further cut made some sense. Then you look out the window, and the threat of tariffs is there, and there's no doubt, that weighed on our decision. The more we can get the economy on a solid footing before it faces new tariffs, the better. And from that risk management perspective, I think that reinforced the decision to cut the policy rate by 25 basis points.
Okay, I gather we're going to have mics being handed out, and Jordan Gowling, Financial Post, you're next, please.
Morning, Governor. If you only have the policy rate, can you just explain to Canadians what the Bank of Canada's role is in a trade war scenario?
Well, obviously, we need to understand what a trade war would do to the Canadian economy. That's the first thing we need to do. We need to analyze it and assess it. Obviously, there's a lot of things we don't know right now. We don't know what new tariffs will be imposed, when, for how long. We don't know what retaliatory measures will be taken. We don't know what any fiscal measures will be taken in response. But there are some things that are pretty clear. In the case of a protracted, significant trade conflict, it would badly hurt economic activity in Canada. Economic activity would be lower, growth would be negative, growth would be lower for a period, and then it would eventually come back to where it was, but the whole path of the economy would be lower. Secondly,
the whole path of the economy would be lower.
Higher. Supply chain disruptions, both those things together will put some upward pressure on inflation. So I think as you were getting at, look, this is a complex shock for monetary policy because growth will be weaker, inflation will be higher. So, and yes, we can't lean against weaker growth and higher inflation at the same time. So, what are we going to be doing? Well, we're going to be assessing
look at that move.
The relative weight of those two, and if
these are 30-second bars, by the way.
If the weakness on the economy that comes through as a result of tariffs and the downward pressure that's putting on inflation comes faster and is bigger than the upward pressure, then monetary policy, I expect, will be focusing more on supporting growth. On the other hand, if the inflationary pressures come through faster and are bigger, monetary policy is going to have to be more focused on guarding against persistent inflation. What are we doing right now? We're running different scenarios. We presented an example of one scenario. It's a pretty severe scenario in the monetary policy report. We're certainly looking at others, and we're stepping up our outreach activities to hear directly from Canadians and Canadian businesses. How are they coping with this uncertainty? How would they react to a tariff, a big change in tariffs? And look, those will be we're going to use that to make those decisions if monetary policy is faced with taking decisions during a trade war. I will just sort of close off by a couple other emphasizing a couple of things. Monetary policy cannot offset the economic consequences of a protracted trade conflict. The reality is the economy is going to work less efficiently. Canada's going to produce less. It's going to earn less. Monetary policy can't change that. It cannot offset it. What it can do is it can help the economy adjust to that and to try to be a source of stability through that adjustment. So the adjustment is less unpleasant than it otherwise would be. The other thing I'll say is that, we have got inflation back down around 2%. We've lowered interest rates substantially. Growth is picking up. So the economy is in a better place. Monetary policy is better positioned to be able to react to developments and be that source of stability.
Okay, next I've got Alicia Sikirska from Yahoo Finance. Go ahead, please, Alicia.
Thank you so much for taking our questions. Governor, does the bank see potential tariffs as a one-time increase?
Sorry, can you talk a little closer to the
Yeah, that's what the document said.
Potential tariffs as a one-time
Right?
increase.
That's
in
literally
price
what it
levels,
says right here,
on
evaluating the
on inflation?
potential
And how
impact of
concerned
U.S.
are you
tariffs.
about the impact potential tariffs could have on inflation expectations and the risk that they become unmoored?
Well, if we do our job properly, yes, it's a one-time increase in the price level. That's
and also in light of what the Bank of Canada said before about taking a more moderate approach to rate cuts. So I'm just wondering kind of what discussions and what considerations.
All right, that was
went
kind of
into
weird.
holding the rates
Computer
and
just
why
blue
that
screened. I had to restart.
at this point.
well, maybe I'll say a couple of things and ask the senior deputy governor, since she was also part of the conversations. We said we would be considering further rate cuts, and we said we'd probably take a more gradual approach to monetary policy. So we did consider more rate cuts. We decided to do one, and it was more gradual. We cut 25 instead of 50. Maybe you want to comment a little bit on some of the details in the inflation numbers and.
Sure. You're talking about some of the core measures, and yeah, I mean, the way we use the core measures is really to gauge kind of what we always call underlying inflation. It's kind of the momentum to inflation, the direction it's going. And there's a whole basket of things we look at. And at any given time, depending on what's going on in the economy and how those particular measures are calculated, any one can be a more helpful signal than other ones. So, I mean, we looked at the core measures. They're a little bit above headline inflation. We kind of took them apart to look at why that result was coming out. There's some particularities, particularly about trim and how it's calculated, that led us to sort of not put a lot of weight on that as a signal of underlying inflation at this point in time. So, when you look on balance, I mean, really the chart that we think is the most helpful to helping us understand where inflation is going right now is the heat map, chart 9. That really says it all, I think, about inflation right now. So.
Okay, I'm going to go to the other side of the room and call on Mark Rendell for the Globe and Mail, please.
Thank you for
This is
taking
the chart
question.
they're referencing.
You've mentioned a couple of times how monetary policy isn't particularly well equipped to respond to a kind of stagflation shock or price level shock like we're seeing with a tariff. Does that mean that fiscal policy needs to take the leading role in response to a trade war? And if so, are there more and less effective measures that provincial and the federal government could take in this scenario?
Well, Mark, I know you know this, but I have to say it again. Fiscal policy is the responsibility and the purview of elected governments. The Bank of Canada, we have a big job. Monetary policy, we focus on that. We leave fiscal policy to them. Look, clearly, just as we're looking at different scenarios and thinking about what's coming, so are governments across the country, whether that's retaliatory, possible retaliatory measures to tariffs or possible fiscal measures. The only thing I will say is, monetary policy by its very nature is a very blunt instrument. There is one interest rate for the whole country, for every sector, for every Canadian. And in some sense, that's what makes monetary policy quite effective, but it also means that monetary policy can't differentiate between sectors or industries. It's the same policy rate for everybody. Fiscal policy can be more targeted, and I think that's what you were getting at. Again, those decisions are decisions of elected governments, and we will leave it to them.
OK, la prochaine question vient de Olivier Ferrand-Boissé du réseau TVA.
Bonjour à vous deux, merci de prendre nos questions. Les marchés s'attendent.
Yeah, it's in French. If there's anyone here who speaks French, I'm pretty sure they'll want to continue listening to it, but we're just going to keep that muted for a little bit. I'm refreshing all the headlines. Wall Street Journal, Barron's RFK hearing kicks off with nomination under fire. Remember, the RFK hearing is going to be a big part, right? He's speaking, and he's speaking in French. All right, let's check out the front page of Barron magazine. German election frontrunner tests taboo with working with the far right. Oh, this is important. We were talking about this guy earlier on in the stream because we were looking over here in the Discord. Go to resources. Nope, I believe it is research. Yep. And then where is it? Yep, German federal election. You can see there's the same guy, right? Same guy. So if MERS is actually willing to work with the AFD, that would be a considerable pivot in strategy. That's breaking news. That's big deal.
Le dollar a déprécié de à peu près 4 sous depuis octobre. C'est maintenant une dépréciation matériaux. C'est pas très petit, c'est pas très grand, mais c'est pas très petit. Et donc, ça va commencer à avoir des effets. Ça va rendre notre exportation plus compétitive, mais les droits de douane va dans l'autre direction. Mais il y a les autres effets. Les prix des importations vont être plus hauts.
This question's almost over.
Pour les aliments, par exemple, ça peut être un effet assez vite. Pour la plupart des biens, cette pass-through va prendre du temps, dont l'effet sur l'inflation, c'est pas très grand. Mais c'est quelque chose que nous avons tient en compte dans notre analyse, notre prévision. En regardant le futur, quand il y a plus d'informations au sujet des droits de douane, j'anticipe que les marchés financiers vont s'ajuster, comme toujours. Et si le dollar déprécie plus, ces effets vont être encore plus importants et on devrait prendre encore plus de ça dans notre analyse. Donc, je vais juste finir de souligner qu'on ne sait pas le taux d'échange. Nous avons un taux d'échange flexible.
Yeah, he's still going in French. Don't worry, he'll be done with the. He'll be done with it shortly here.
Politique monétaire, ça nous laisse au Banque du Canada à gérer la politique monétaire pour les besoins de l'économie canadienne.
Okay, I'll come back to this side of the room for Mackenzie Gray from Global, please.
Hi there, Governor. You mentioned before that the scenario that presented in the NPR today is a very severe one, but I'd just like to get some kind of clarity on what your base case assessment is. If the 25% tariffs come in, is it the bank's feeling that there will be a recession and that inflation will go up at the same time?
Well, yeah, so just to underline, this is, the scenario we chose is a severe scenario. It's a 25%, so the U.S. puts 25% tariffs on every country, not just Canada, every country. Every country responds one for one with 25% tariffs on the U.S., and this is permanent. It's not, sort of a first shot to a subsequent negotiation, it's permanent. So it is a very severe scenario. What it shows is, we were really trying to show two things. The first thing is that, yes, this would have a severe effect on the Canadian economy. What you see in most of those simulations is growth in year one after tariffs, sort of 2.5% to 3% lower than it otherwise would have been in the first year. So, if you thought growth was going to be 2%, if you take 2.5% off 2, you've got a negative number. So yes, people would call that a recession. The second thing, though, I want to stress is that the simulation, this scenario and the various simulations were also designed to show that exactly what happens is quite sensitive to numbers. Getting a little technical, they're sort of parameters in a model, but what are these parameters reflecting? Well, these parameters are reflecting, well, how would Americans and Canadians respond to these tariffs? So just to give you a couple of examples, if you're an American and Canada, and so the U.S. tariffs actually are a tax on Americans. They actually pay them. So anything they import from Canada becomes more expensive. So the question is, well, how do they respond to that? Do they just decide, oh, I'll pay more, or do they go and do they find another supplier, maybe a domestic American supplier, or maybe they find an import from another country that isn't subject to tariffs, although in our simulation they can't do that because the U.S. put it on everybody. So, how do they respond? Similarly, when you look at Canadian importers, if we retaliate now, the import prices will be higher. Okay, well, who pays that import price? Does the importer decide to take that on their margin, or do they decide to pass it through to the consumer? How quickly do they do that? So there are a number of things, and as I said, we don't have a lot of good historical examples where we've had tariff shocks of this magnitude. So it's hard, we can't just go and estimate what's happened over history. So we're trying to show that, look, this would have a very material effect, would have a very severe effect on economic activity, but exactly how quickly, how big, how people react, what the implications are for inflation, there is a certain zone of uncertainty. And so, we're going to be working to try to narrow down that uncertainty as we move forward.
Okay, I've got 2 left here in the room and then 3 on the phones. Mike Lecouture from CTV, you are next, please.
Thank you. You started to ask, or preemptively basically ask yourself a question, so I'm going to put it back to you. What would happen to interest rates if there are tariffs?
Well, actually, I think I actually largely answered that question when I responded to Jordan. But look, I'll be very blunt. I can't give you a definitive answer to that question today because there's a lot of things we don't know. But what I can say is that we will do everything we can to be a source of stability. And as I outlined in the response earlier, this is a complex shock for monetary policy because growth goes down and inflation goes up. And we can't lean against lower growth and higher inflation at the same time. So we're going to have to weigh, which one's bigger, and we also have to look at the timing. Which affects bigger in what time period, and how do we do the best job we can to adjust interest rates to be a source of stability. And what happens to interest rates will really, what I think we'll be looking at is the weakness in the economy and the downward pressure that's putting on inflation, is that bigger than the upward pressure coming on inflation? And if that's the case, monetary policy can be more focused on supporting growth. On the other hand, if the inflationary consequences come through quicker and are bigger, monetary policy is going to have to be more focused on guarding against ongoing inflation. As I said, we are upping our outreach to Canadians to try to understand exactly how they're going to cope with new tariffs if they come in. And, just to underline something I said before, monetary policy can't offset the effects of higher tariffs. Economic activity will be lower. We'll be producing less in Canada. We will be earning less. What it can do is sort of smooth that adjustment so it's less abrupt than it otherwise would be. And we will certainly do everything we can to be a source of stability.
Okay, our last question in the room, Randy Thantong Knight from Bloomberg.
Hi, Governor. How should we interpret your decision to remove any rate guidance from your policy statement today?
Well, I think the answer to that's pretty simple. There's a lot of uncertainty out there, and it just didn't seem very useful to provide guidance. I think we've been pretty clear. Here's how we see the economy without tariffs. We don't know what the U.S. is going to do, and even when we do know more, we're going to have to do some more work to figure out exactly how that's going to play out through the economy. So, didn't seem very useful to provide guidance.
Okay, that's it for Ottawa. We're going to go to the phones now. I'm just going to remind people, come off mute only to ask your question. Go back on mute as soon as you finish so we can all hear the question. We've got 3 folks and we're running out of time, so let's get right to Max Sato from Mace News, please.
Thank you, Paul. Good morning, sir. My question is for both of you. We saw a brief moment of a CPI drop from a year earlier at the start of the pandemic, and back in the late 1990s, Canada had a period of disinflation, and at the time, the Bank of Canada under Governor Thiessen cut interest rates, and I remember inflation quickly moved back from disinflation. And I understand you're more concerned about inflation caused by trade growth, but looking beyond that, is it still possible for the Canadian economy to face disinflation or deflation again? How to prevent that sort of situation? How to respond if it happens? Thank you.
Well, I'll be very brief and ask the Senior Deputy Governor to chime in. Look, our job is to maintain price stability. And our focus is making sure we don't have inflation that's well above our 2% target, or we don't have inflation that's well below the 2% target, and certainly not deflation. That's that's going to be our focus through the possibility of a big tariff shock. And I think I've been pretty clear. We've got to really understand everything that's going on in the economy to do that job. But I don't know if you can add anything.
Tough to add to that. The scenarios that we presented in the NPR are just that. They're meant to help you understand how we're thinking about the different effects on the economy that could come as a result of these threatened tariffs. But they're not a crystal ball. They're models. They'll give us a sense of the different decisions that we're likely to face, but we'll have to face them at the time.
Okay, next is Rob McClister from Mortgage Logic News, please. Rob.
Good morning. Thank you for the great scenarios in NPR today. It's argued that tariffs provide a one-time boost to price levels. But 3 or 4 years ago, it was also said that COVID-related inflation would be everyone's favorite word, transitory. One-year inflation expectations then surged almost 5 percentage points in 19 months. Would you agree that recent history seems to support the fact that one-time price surges and support measures can evolve into spikes in inflation expectations?
Let's listen to this answer. This is going to be good. We talked about this earlier in the stream.
This is similar to the question we had earlier, right? And that is exactly the scenario we would want to guard against, Rob. So initially, tariffs present a one-time price increase, but they can reverberate, just like we saw things reverberate in COVID. So that's exactly the scenario that we would be wanting to guard against, and why we would need to react if inflation takes off. If the inflation forces are stronger than the downward forces on growth, then it seems clear what we would need to do.
And finally, we have Anis Haydardi from CBC. Go ahead, please, Anis.
Hi there. So given that you have told us that, monetary policy cannot really do much in these cases, and we know that Donald Trump has said repeatedly, or at least his administration, that February 1st, Saturday, is the day something is happening. What are you folks going to be doing on Saturday morning or Saturday afternoon?
Well, I will be watching the news very closely, as I imagine most people in this room will. Look, I think as we know more, we have more clarity of what's going to happen, we can start to, build that more into our analysis. And look, we're going to have to take our decisions in real time as developments unfold. What I can tell you is that, look, if there are major developments, if there are big changes, we will update you on our analysis. We will keep you informed.
Yeah, it's exactly what I thought he'd say.
We think, how we see things evolving, and what's on our mind as we are faced with. We're all faced with, managing
setting expectations and having your expectations met. Man, what a perfect time
Thanks to the governor,
to have that ran.
And all of you for joining.
Oh man, that was a great example. Like all of the scenarios that we broke down going into expectations of what Malcolm might be saying at the Bank of Canada meeting here. I freaking nailed it. And in that last question, finally, he said the last bit that we covered, which is, hey, we're going to have to set our expectations in real time as we get new information. So we're not going to give any forward guidance, and we are going to update you when we have the information, which was exactly the case we talked about earlier on in the stream, and I am pretty proud of that. That's really, really cool. But that is the more neutral, slightly hawkish scenario, so that's not terribly hawkish. So when the meeting started out, it was definitely more on the hawkish side of things, like, okay, we are not doing anything, and pretty soon it's like, once the Q&A started, it's like, okay, yeah, once we get some information, we're probably going to update our expectations. Yeah, if things progressively get worse, immediately we'll, issue some statements or whatever. That's exactly what we talked about earlier in the stream, that we said what was probably going to happen. It's always nice when you set expectations and you get, pretty much on the bullseye there. It's very, very nice to see when that happens. Very, very nice when that happens. So with that all out of the way, I did say I'd end the stream because we have another stream coming up here. We have FOMC, and just as a reminder for everyone who's currently here, check out the chat right now for a link to the next stream, which will be for the FOMC. Now, the FOMC meeting is how many? Yeah, the FOMC stream is in like another hour and a half, well, almost like 2 hours from now. So we'll go ahead and wrap up this stream. I'm going to be hanging out here in the Discord. You'll find me here in the trading room. I went ahead and I joined it. And I'll go ahead and get us all set up into a match of poker if anyone wants to hang out over the next hour or so, and we can play some poker and talk trading. In the meantime, while we wait for the next stream to start. And, we can talk about setting expectations for the FOMC while we're in there, if we really want. I know it's probably more beneficial if, for YouTube purposes, I don't start a whole separate stream, but the last 2 hours of footage here has actually been like a content gold mine. There's been So many like 10-20 minute segments that have, you know, melded together in such an elegant way all throughout this stream. It's been a very, very, very good segment for today, and we still have one more stream today, the FOMC stream. It's right there. I'll go ahead and paste it a few more times in the chat. Make sure you click on that and you hit notify so you get notified when the stream goes live. And essentially I'm going to be on break for about an hour and a half, hanging out here in the Discord. If you want to get into this Discord, the link to it is in the description. Also, link to all these indicators and whatnot is also in the same link to the WAP. And if you guys want to talk with me, review any of this stuff that we talked about today in the stream, go ahead, hop in the Discord, and we will be starting the stream again in about an hour and a half. If you are in the Discord, you will get a notification, a stream notification. So don't worry if YouTube isn't going to notify you. So long you have notifications on for the Plan the Profit server, or at least for this stream's channel, you will get notified when the stream for FOMC starts. And we're going to be hanging out for like a whole hour going into the FOMC event, and then for the entire Powell speech, and then probably hang out for like 15-30 minutes ish after Powell's speech to kind of wrap everything up. Okay, so you guys ready to trade FOMC? I sure hope you are. Well, with that said, in case you're not going to hang out with me at the FOMC stream, you got other things going on, go ahead and send some money bags in the chat. And I will see you guys in an hour and a half in that other stream. And if you aren't subscribed and you want to follow that other stream, go ahead, make sure you subscribe and turn on the bell. You'll get a notification. Okay, let's go ahead and transition this stream out. In a bit, guys.